Okay, we're almost ready to start the live stream. Thank you so much for joining today. We look forward to discussing the market situation today, take a look at the portfolio and see what happened over the last 4-ish weeks. So let's dive right in. Before we go into the technicals and financial details, I want to put a little disclaimer out. This is for educational, informational purposes only. No financial advice here, neither professional, legal, or tax advice. And the performance that we have on some of the slides is not guaranteed to be replicated. Historical results are not indicative of future performance. Always do your own research and talk to professionals. So portfolio is actually down 19.5%. Our Roth IRA portfolio, the main one we're tracking here. This is not the largest one, but the one that we've been tracking in the Salt Money Options community. And main reason being we have invested in some tech companies in the portfolio. We have invested in companies that are connected with crypto and Bitcoin performance. And as you might know, those assets have kind of tanked. Some of them have dropped as much as 50% or a little more over the last several weeks. So the portfolio is expressing that. And of course, in a Roth IRA, there's no way to use margin. So people who use margin accounts, they might actually see drops larger than this in this time frame. But this is just part of investing in the stock market. We have to learn how to navigate these. There are strategies we can deploy to actually reduce the impact of market corrections, reduce the number of assets that we have in there, and choose some that are less correlated, diversify across industries. But other than that, those are like proactive measures we can take right now. Since we are in a situation where portfolio has corrected, market has corrected, the proactive things we can do is consider finding some opportunities to actually invest. And one way that I've been doing it in some of my portfolios is to choose stocks that I own shares in that I think will perform well in the next 1 to 2 years. And then actually I sold those shares and I bought call leaps to kind of create more leverage. In some cases, I replaced 100 shares with one call leap, which means you are not having a one-to-one mapping. So if it recovers, the price recovers or rises, you will not get the same growth as you get from 100 shares, but it frees up capital in your account. So you can also take advantage of other opportunities. And in other cases, I have sold shares and then bought like 2 or 1.5 call leaps. Like if I sold 200 shares, bought 3 call leaps, for example, right? To kind of get a similar exposure, or even a larger exposure to the upside. Since some of the companies have corrected to degrees that don't make a lot of sense, in my opinion. Examples right now are Robinhood, Oracle. I think those corrections are a little bit overdone. There are several others as well. So for example, also shouldn't be this low probably. But as I said, not financial advice, just my personal opinion. It could take years for a recovery, but I think eventually these companies will recover, and most likely, in my senses, they'll recover pretty well this year, but we'll see how it plays out. Of course, there might be more downside. The reason a lot of investors positioned this way in the market is because they moved money out of risky assets into ETFs, and specifically value stocks that have a large amount of assets, very established companies, dividend stocks, for example. So that they removed out of more risky stocks into less risky stocks and investments. And that caused a lot of these technology companies to drop, crypto-related companies to drop. They pulled money out of Bitcoin as well, obviously, otherwise we wouldn't have the current price. And that is something that some people consider also to be a little bit overdone right now. So the money is kind of trying to find a place to go where it makes sense to land. And that is an interesting dynamic. People pay a lot of attention to economic news right now. Of course, tariffs have been a bit of a hot topic last week. Question is, how will the administration respond to the ruling from the Supreme Court? Looks like they'll have some form of tariffs going forward, maybe not the same kind, but those details are still being worked out, and we'll get more news on that this week, I'm sure. Okay, let's look at some of the actual trades we did in this portfolio this month. We were not very active, but wanted to share that we sold a put on TSLL at the end of January for a strike price of $17.5. At the time we sold that, I think that ticker was trading around $18.50, maybe $18 at the most. So kept a little bit of a distance. And since then, Tesla has dropped, but actually not a ton. Sometimes the price is hovering around $15, $16 today. And since we collected almost $80 in premium, that's over 4% ROI for about a month of time frame, slightly over a month. So that's a really good ROI. And right now we can actually sell a call on TSLL for $17, $17.50 with a good amount of premium, where we would recover the entire entry price and some change if we want. And then of course, sometimes when we sell a call here, we might not take the assignment. If the price gets close to assignment, we might just roll it up and out another week or two, maybe a month, to capture more premium or stock appreciation rather. Or a combination of premium and stock appreciation ideally. So I like to roll for a credit, roll calls up and out for a credit if I can, if it makes sense, if I feel like the price is recovering of the specific investment. Yeah, so we then took an assignment of these shares, maybe like 2 weeks later, 3 weeks later. The assignment happened a little bit early. Somebody must have triggered it. So right now we have a call in the queue to kind of capture more of the premium upside. Other changes we made in the account is 2 rolls on Riot calls. And this, let's see, this is actually the same call that was rolled twice. So on February 13 on the left side, we rolled the call at the same strike price because market price was below. Just a week out, captured another $44 in premium. If I recall correctly, Riot had their earnings call that week. That's why the premium was slightly elevated. And then when the call was due to expire, the market had reached the price of 16 or exceeded it slightly. So instead of taking the assignment there, I decided to roll it higher. That was actually last Friday. And even though the price was quite a bit above $16, approaching actually $70 if I recall correctly during the day, by the end of the day, I'm pretty sure Riot closed below $16, but I had already rolled it out for a week for another $70 of premium, kind of capturing 1% more of premium for the week and also more upside. So we'll see how this company performs this week. Closely related to Bitcoin as well. They have some other exposure, like the compute infrastructure that Riot owns, and all the components can also be used for AI model training. And they have taken some steps in that direction, maybe started negotiation with some companies. So Bitcoin and crypto is not the only exposure they have. If Bitcoin would go a lot lower from here, they would probably be quite interested to take on some compute workloads. And that could help this company do well over the long term. Maybe Bitcoin stays a little bit lower for a while, but the data center area will recover, because I feel like that need is not overblown by a lot. It's overblown by a little. People got hyped a little bit at the peak of it. Sure, that always happens. But there's a lot of substance there. AI models are being trained like wild. There's a lot of competition between the large companies to have smarter and smarter models. And people who know how these models work, for a lot of use cases, it's like software engineering, which is an area that I'm deeply involved in and have been for the last 30 years, it really makes sense to use the most experienced model, the smartest model, so to speak, because you save a lot of cycles, you get better software as a result, you get more of a staff level and upper level software that's written by the models, instead of something that might not run on the first try, or it might work, but it's not very maintainable because it created too many lines of code, or did not choose a good structure, a good architecture. And those drivers, and right now software engineering is a big driver for the model training, because a lot of software as a service companies and large companies in general, they use these models to build software faster, to solve business problems faster, and that will continue to drive companies that provide these services and these models higher. There might be some losers, might be some winners, sure. But in the data center space, I think there's going to be a lot of demand, and most likely more than the industry can meet right now, because we're also hitting power constraints where the grid cannot deliver, and data centers are sometimes ready to be switched on, but the power company does not give the green light to turn on the power to actually start the servers, and that creates more pressure on the market and potentially more price increases for companies that lean into it and actually have compute resources available with decent margin. Okay, those are the two roles we made. That's kind of the portfolio update I wanted to give. This update is from our community, Salt Money stock option sellers. We also have a live Q&A call right after that. So if you're interested in being part of a community that learns how to sell stock options profitably together and generate cash flow from the portfolio, then you're welcome to join us at saltmoneyoptions.com. This is a view of our community in school. That's what it looks like after you signed up. And we have our option selling bootcamp, where we go into details and cover a lot of the fundamentals on how this strategy works, how to get consistent income that you can use to pay some of your bills. And if you have a larger account, you can potentially use it to pay all of your bills with limited amounts of risk. Of course, as you have seen, sometimes portfolios correct like up to 20%, like we have right now in the course of a month. And that also affects the cash flow generation. So it's still necessary to keep a little bit of a buffer if this is your only income source. You cannot just have a portfolio that barely covers all of your bills from cash flow. You need to have a decent amount of buffer, because when the market corrects and the correction lasts for a while, you might be assigned on a number of puts that you sold and not be able to sell calls at a decent premium for a while. So you have to be able to still pay your bills, and then later you can recover some of that missed cash flow. But it's always good to be diversified, have buffers, have money sitting in a savings account or somewhere where it's very low risk and still earning some returns. So you can tap into that and actually, make this a lifestyle where you have a cash flow that kind of funds your life from your portfolio, but you're prepared for market crashes and downturns, and can still navigate everything without having to sell shares and assets at the worst time, right? When you have to sell them at a discount. Okay, yeah, you're invited to join us at moneyoptions.com if you want to learn more about how stock option selling works and how you can get like 2 to 4% ROI on a monthly basis. That's what we aim for on average. We also have a more advanced community at stockoptionpros.com for people that are familiar with the fundamentals, have larger accounts, I would say $100,000, $200,000 and up, and are ready to kind of do a combination of reducing risk and generate large amounts of cash flow. We go over the strategies that we use for those scenarios in that community. Thank you so much for joining. We're going to hop over to our Zoom for the Q&A session now. And you're welcome to join us on Stop Money Options right now and click the link in the calendar there to be a part of the Q&A. Thank you so much for today, and I hope